Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. And today it's quite a choppy session so far. There have been bouts of volatility, not major swings, but yes, we've been hovering around that red and green mark. For now, Nifty above the 25,000 mark. But the Bank Nifty, that has come under pressure after seeing some recovery from the lows.
You're right, and even in the broader end of the market, the mid-caps are doing well. The mid-cap index is in the green, but it's the small-cap index that's trading with cuts. So very choppy, volatile trading session is what we are seeing today. Let's start off with the top headlines. Stocks trade in a narrow band as concerns over slowing Chinese consumption square off against expectations of a US Federal Reserve rate cut. FMCG and healthcare are the prominent gainers, even as energy, metals and autos drag. Mid-caps gain.
BMW cuts its guidance, joining European automakers like Volkswagen that are feeling the heat in a tough business environment. Indian vendors like Samvardhan Motherson feel the heat, even as concerns rise over JLR's ability to escape unscathed.
JSW Infra gains after CNBC TV18 reports that the company is contemplating a significant fundraise. Sources suggest JSW Infra may look to raise in excess of 5,000 crores via a QIP issue.
Crude oil prices slumped to a 3-year low, down 18% this quarter, with Brent slipping below $70 per barrel. Concerns over a slowing global economy weigh even as fears of short-term supply disruption due to storm spark a bounce.
Housing finance companies like Canfin Homes, PNB Housing gained between 2 to 4%. The Bajaj Housing Finance IPO sees subscription of almost 30 times as the issue draws near a close today.
Well, talking about the choppiness of the market that we are seeing, Nifty has slipped into the red yet again. When we started the show, it was up around 30 points, but now down in the red, 5 points lower. And that has been the case. If you look at the graph as well, it's been a roller coaster ride for the Nifty today. The Bank Nifty is down 150 points right now. That's a major laggard in trade. Mid-caps doing well, as Vivek was pointing out earlier. It's the small-cap index which has come under a bit of pressure. Very stock-specific markets. We have autos which are not doing well. The CPSE index which is not doing well. Metals index have also come under pressure. We'll talk about steel in greater detail in just a bit. But what's doing well is the FMCG space, the defensives basically. IT is the other gainer. So it's, as I said, very, very sector-specific and stock-specific market today. And largely, we are seeing some signs of ebbing from the highs as we speak.
That's right. Quite a bit of selling pressure, especially in the auto pack, especially auto companies, facing the European market. Just before we move on to Hormaz, there has been a clarification from JSW Infra regarding, the news development that we reported earlier. JSW Infra has said that at this point of time, the board has not yet received a proposal for a fundraise or a QIP plan till now. But this is our special segment, Mid-Cap Movers. We have Hormaz to take us through the mid-caps that are moving around in the session.
Not being able to sustain at the highs are the benchmark indices, but it is the mid-cap index that is standing out in an otherwise choppy/weak market, if you would like to call it that. And some of the gainers within the broader markets. Yes, it is a very stock-specific market, but there are a few gainers on our list today. And starting off with the stock that Vivek just highlighted, it was JSW Infra, almost 5.5% higher, slightly coming off the highs of the day. Suzlon, another 5% upper circuit for the second day running. Page Industries is a surprise mover today, 4.5% higher at the highest point of the day as well. And Century Textiles now up 12% in the last two trading sessions. Oil has been the focal point today, and most of the oil sensitives have reacted to the oil prices. All India is down 5% on expected lines. HPCL opened higher, but now has slipped into the red, as have the other OMCs as well. But Berger Paints and other paint companies are having a good day as a result of these crude price falls. Now, some other stocks within the auto space that are reacting to the BMW guidance cut, Samvardhana Motherson and Suprajit Engineering both seeing losses of close to 3%. Stocks that are doing well on the back of volumes, and they will come up on your screen. Prism Johnson continues to move higher, as was yesterday's case as well, 13% higher now. Borosil Renewables and Apar Energies as well at the highest point of the day with very strong volumes. And lastly, stocks that are on the losing end, some of the others besides the ones that we just highlighted, Aether, Sumitomo Chemicals and Honasa Consumers seeing losses of anywhere between 3 to 5%, and all three of them at the lowest point of the day. Back to you guys.
Okay, all right. Thank you so much, Hormaz, for joining us as always and taking us through some interesting movers in the broader markets. As we've been pointing out, there's some ebbing from the highs. Let's try and understand the technicals of the markets with Sudeep Shah joining in from SBI Securities. Sudeep, good afternoon. Tell us what the next important level be on the Nifty. It's been quite choppy, but we have stayed above the 25,000 mark so far.
Good afternoon, Sonal. Good afternoon, Vivek. Sonal, what I feel is what's happening with the Nifty is that post that fall on Friday, wherein Nifty had retested that 24,800 mark, and subsequently on Monday, 24,750 acted as a support. From there, we have had quite a bit of recovery. And there are three higher lows also which are visible now. So what's happening is that yesterday's high of 25,130, 25,135, that zone will now act as an important resistance. I feel till the time this is not taken out, Nifty would be oscillating between 24,900, 24,930 on the downside and 25,130 on the upside. Now this lower zone of 24,930 is the 20-day exponential moving average, which like for that period of 14 days when Nifty was scaling, new highs was never been breached. It took good support over that zone. So that zone will from here on will act as a trend decider. So 24,900 for me on the downside will be the most important level that we need to watch out for. And for this rally, for this medium-term rally, which has been spanning over the past several months, for this to continue, I will 25,130, 25,150 zone will now act as a crucial resistance on the upside. So above that zone, Nifty once again would be on its way towards 25,350, 25,400. So yes, as of now, as we speak, 24,900 and 25,130 at looks like a decent range for the time being.
Okay, so 24,900 on the lower level is what we'll be watching. Good afternoon, Sudeep. Sudeep, what are your individual picks for the day?
Good afternoon, Vivek. See, Vivek, individually, if you see, there's a lot of buying happening in the consumption space or the consumer durables. So here, Havels is one of my pick. This stock has given a declining trendline breakout. We've seen this breakout spanning like after since lower highs have been formed since June, and yesterday we've seen a breakout here with a rise in volumes. Today, there is a follow-up action on the upside. In the last 12 to 14 sessions, the stock was consolidating around 1850, 1900. And today, now it's comfortably trading about that consolidation range, and it's broken out on the upside with a rising open interest. So I feel Havels from here on could continue moving higher, and it's in a way outperforming the other stocks also, other mid-cap stocks also. So here 1920 will act as a decent stop loss on the downside, and on the upside levels of 2000, 2020 could be visible. The next stock that I feel could do well for the next few weeks and not just days is Zomato. Now, Zomato, we have seen it was in a decent uptrend since June from the lows of 180. It scaled to highs of 280 in August, mid-August. And since then, it declined a bit, retested its support zone around 240, 245. And once again, in the last 4 or 5 days, has been forming a series of higher top, higher bottoms on the charts. And now almost crossing its previous swing highs. So I feel from the current levels, this could be bought with 270 as the stop loss on the downside, and the targets could be 290 and 300 on the upside.
Okay, all right, Sudeep, thank you so much for joining in now. Just a quick mention on some of these oil marketing companies. I know we've been talking about how crude prices going down are positive for these companies, but look at these stocks. They've come up from the opening highs, be it HPCL, be it IOC. Some of these standalone refiners are also lowered. Something like an MRPL is down 3%. Now, since the crude price fall is on the back of a demand issue as well, this wouldn't largely be a longer-term positive for these oil marketing companies, and that is something that we need to keep our eye out on, because if demand is lower, that would mean that refining demand would also go down, and that would not largely mean that it's all that positive for all these stocks. So important to make that mention that while it is a positive fundamentally, but the internals would mean that there could be some inventory losses that these companies will have to account into in the quarters to come. We'll do one thing, we'll slip into a short break now. When we come back, we'll get to more on the markets and stock-specific action as well. Stay tuned for that.
Welcome back to Midcap Radar. Well, the Indian steel sector dynamics are changing with rising Chinese steel exports, which are on course to cross 100 million tons in calendar year 24. Nigel is here with more details.
Well, let's update you on how the steel sector dynamics are shaping up. And let's start with the dominant force, which is China. Now, in August, Chinese steel exports, they surprised negatively. They rose sharply by around 21% on a month-to-month basis. And the monthly run rate of exports has now been rising consistently over the last few years. That's predominantly because of the weak domestic demand as a result of the declining property market. Now, this puts Chinese steel exports on course to cross 100 million tons in 2024. This was last seen in 2016 itself. Now, Chinese steel prices as well have dropped to an 8-year low, and they're down more than 15% if you compare it to the first quarter of this fiscal, which is also putting pressure on global steel prices. In addition to that, the raw material cost as well is falling. So we have iron ore prices that have slipped to around $90 per ton, and that's the first time since 2022. The worry is that iron ore inventory at Chinese ports, they have moved up, and now they are 30% above the average inventory levels that we saw at the same period last year. Now, weak Chinese prices, falling iron ore costs, they have put Indian steel prices at risk, as domestic HRC prices have tanked by around 4,500 rupees in comparison to the first quarter of this fiscal. But the problem is that domestic steel prices, they hold a 6,000 to 6,500 rupees per ton premium over landed import prices. Additionally, India continues to be a net importer of steel, with imports clocking 410,000 odd in the last month itself. So there are plenty of negatives stacked up for the steel sector, but as we have seen in the past, when the sector turns around, well, the street gets over pessimistic. So the question is, well, is that time around the corner? Too much of pessimism? Sometimes you do see that things turn around. Let's see how this goes.
Okay, all right. Thank you so much for making sense of the moves that we've been seeing in the steel markets, Nigel. In fact, Nigel has been talking about increased Chinese steel imports that are having an adverse impact on the domestic players, and the government may consider hiking tariffs now. From the sidelines of the IMA National Management Convention, Lata Venkatesh caught up with TV Narendran, MD and CEO of Tata Steel, to get his views on this issue. Listen in.
The big problem is they are selling steel at prices at which they are losing money. And this is having its impact on the rest of the industry across the world. Other countries have taken action, and I think India should certainly look at taking some actions. To some extent, the iron ore and coal prices have dropped, and that's helped support or limit the losses, let me put it that way. But the problem is acute, and the financial statements of the Chinese steel companies state the obvious. And the chairman of the biggest Chinese steel company, Baowu, has also himself said it publicly that the industry is in very bad shape in China. So I think we should not let them export their problems to us. Honestly, in this industry, unless you make a 15 to 20% EBITDA margin, you will not have the cash flows required to build new steel capacities. Because building steel capacities is a lot of money. It's $1 billion, a million tons roughly, right? So you need that 15 to 20% EBITDA margin, and otherwise you will not be able to build capacity. You can survive, but you will not build new capacities, and India needs new capacities.
All right, that's the word coming in from Tata Steel, the steel major. Important commentary on any possibility of tariffs. But paint stocks, they're buzzing in trade today. Mangnam is joining us to tell us the impact of crude oil price fall on these names.
Well, the obvious reason for paint stocks to be buzzing today would be crude. But, you know, if you look at the bottom of the barrel, you would realize that there are a lot more factors working for all these incumbent paint stocks. And as a result of which, the decline in crude prices is only one of the many triggers which is taking these stocks higher. Let's talk about the most important trigger, which is demand. If you look at, you know, the commentary coming in from all the paint companies post their first quarter numbers, they have said that demand is picking up. They expect double-digit volume growth in this year itself, aided by rural uptick. And all of them have already taken 1 to 2% price hikes already. Add to that, if the sales are likely to pick up, are the raw material prices a problem? Well, they were a problem until they took the 1 to 2% price hike. But now going forward with the crude price decline and all the other paint raw material prices are at near 1-year low. And in case of crude, it's near 3-year lows. So that factor gets taken out as well. The biggest imponderable for the paint sector over the last 3-4 quarters was the entry of the big competition coming in from Birla. Out there as well, it looks like, you know, 2 quarters in, the street seems to have sized up the impact or the extent of the competition itself. I'm looking at some of the comments coming in from all these paint companies in their conference call, where Asian Paints has said that new launch seems to have underperformed expectations. Berger Paints itself has said initial enthusiasm of the new entrant appears to be fading away, including among dealers, and that's an important factor. Kansai Nerolac says the confidence of dealing with competition is a lot higher now than what it was 6 months ago. And Indigo Paints too has said they've observed no changes in the competitive landscape or even pricing pressures for that matter. So with all these factors coming together, there was a lot of underperformance in the incumbent paint industry. So the valuations have normalized as well. Yes, 54 times for Asian Paints 1 year forward does not appear cheap on an absolute basis, but on a relative basis, it is a lot lower than what the stock has been trading for on a 5-year average. Berger too at 49 times and Indigo at 38 times as well. So with all of this, what are the key things to track for the paint industry going forward? One, everyone's talking about Birla Opus not being as much as expected, but remember the most important season for the paint industry is the festive season. How does Birla Opus perform in their first festive season is something that we'll track. Also, how the overall festive demand pans out. Monsoons have been largely in line with expectations, slightly above normal as well. Does that translate into better sales for these companies is something we'll be tracking. And crude oil prices, yes, they've been at a near 3-year low, but do they sustain here or do we see volatility and further spikes as well is something that I'll be tracking very closely.
Thank you so much for that, Mangala. We know all the paint stocks doing very well in the session today. But let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Well, the Ministry of Corporate Affairs has moved to fast-track the process of reverse flipping, which is the process of a foreign holding company merging into its Indian arm. Ritu Singh is joining in with all the details and explaining this to us as well. Ritu.
Well, in a big boost to what is commonly referred to as reverse flipping, which simply put is the homecoming of Indian companies which were domiciled overseas, the government has decided to fast-track the process by clarifying the compliance requirements which will apply for such structures going forward. The Ministry of Corporate Affairs has introduced a new sub-rule to Rule 25A of the company's amendment rules, under which both the foreign transferor holding company and its wholly owned Indian arm will have to obtain RBI's approval for mergers or amalgamations. The Indian transferee company will also have to seek the government's approval by filing an application under Section 233 of the Companies Act and Rule 25 of the Companies Rules, which deals with this matter. Now, these new rules will come into effect from the 17th of September, and experts suggest it can potentially reduce the delays which are caused by the overburdened National Company Law Tribunal, potentially speeding up the process. The move is mainly going to benefit Indian startups that are headquartered overseas but are now looking to move back to India to either list here or take advantage of the regulatory or tax benefits. PhonePe and Grow are recent examples of companies that have reverse flipped, and there are many others in the waiting. For instance, Pine Labs is in the process of doing so, where the NCLT process is already underway, so it needs to be seen how the new rules affect that. Others like Razorpay or Flipkart are also looking to move their headquarters back to India and may benefit from these changes.
Thank you so much for that, Ritu. But with that, it's all the time we have on this edition of Mid Cap Radar. Your stocks when we return.